Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a huge week behind us. We welcome over 1,000 new subscribers again, so thanks for joining us on this journey. If you are new, we cover all the local and global finance news. There's a lot of crypto news that's intertwined with that these days. Then I take a look at all the altcoin headlines and work our way up to the larger cap coins, XRP, Ethereum, and particularly Bitcoin. So it really is coming together lately, guys. It's fantastic. I know price is down, but there's something very special, I think, heading our way in the next 12 months or so. So I wanted to introduce a couple of new team members. As you know, Nuggets News is expanding now. We've got 4 full-timers, a few part-timers and casuals. So we do welcome Matt and Megs, part of the Nuggets News family. We had a bit of a Christmas lunch down in Tassie, and what that means is that there's going to be more content and even better research coming your way. So we've already released our first version of the 5 Fundamentals monthly report. Members will get that one for free, as well as our silver report. So last month we covered gold. I've reached out to some experts that I know in this industry to give you guys the best gold and silver and crypto research to make better informed decisions. So I hope you guys enjoy that. Final reminder that we are extending our promotion. This has been wildly successful. I think I've sent $100 of Bitcoin to over 100 of you guys. So look, eToro, a great place to trade. And I'll mention a few trades when we get into the macro news as well. Okay, so off to a positive start where we had the Victorian Liberal Party actually overwhelmingly vote to reject the $10,000 cash ban. So a step in the right direction for John, Martin and the CEC, all the guys that are out there fighting for our liberty. Roger Montgomery, a friend of the channel, published a great article this week about the strong rebound, and they're starting to see it in some areas of construction as well. So I can't wait to do next month's housing update with Martin. It really is dividing people whether this is a dead cat bounce or a strong rally, and housing is going to continue high next year. And as you guys know, I think a lot of that is depending on monetary policy, just like everything these days. So Josh Frydenberg started off the week on a note that got him in a little bit of trouble with the elderly population. So over 60s need to retrain to boost the economy. So just as everyone's looking to retire and we've got these baby boomers, we're starting to hear things like you're going to have to work longer, and pension funds, retirement funds already running out of money, and that compound growth that they need, it's just not there. So there's a lot of these headwinds. I've discussed it on the channel before. I'll continue to discuss it, but talking about pushing back the retirement age and retraining. But unfortunately, there's a lot of people in that age bracket already looking for more work than normal, but they can't find those jobs. And that's why I think the underemployment rate is going to continue to creep higher. 166 years Dimmies ran for, and it's now shutting its doors. This story has commented on a number of these retail type stores that are shutting down. So look, I think this isn't just a product of a weaker economy. If you're a business these days, you have to have some sort of online model. And if you don't update and keep with the pace of change, then unfortunately things like this happen. So look, if anyone works at Dimmies, I really feel for them, and let me know in the comments below if you're in retail, how it's all going. And if you have plans to come out with some sort of online model, even if it is just a Facebook page. It's an absolute must these days to compete with everyone else and the giants. So the Australian economy is weak and needs more government spending. This is something that I've been saying as well. There's no point having a surplus. You need to get really active. We did see some plans this week that they're going to bring forward and roll, I think it was $1.7 billion in the next 12 to 24 months. But I really think we need more tax cuts and getting money in the pockets of everyday Australians. And obviously having the big end of town pay their fair share as well. But structural reform, I've said it 100 times, we need those high-paying, high-skilled jobs. Households are going into debt because of the cost of living, and the RBA knuckling down, cutting rates further. Who knows? We know they don't want to go to zero, so there's that talk of QE and money printing that's going to be likely next. In terms of home loans, we saw that Aussie have been accused of misleading customers. So I posted this one on my personal Facebook, and again, this really divides the community because brokers do play an important role, and there's plenty of good brokers out there. I've got friends that are brokers that are honest and whatnot, but there's also these allegations that people are giving out these bonuses and other things under the table, and some of the bigger banks had the best performance and reward commissions. Therefore, they weren't always necessarily giving you the best loan. And with so many options out there these days with the smaller lenders, there's some really competitive rates. So I encourage you all to get educated, shop around, and we've actually got something really special coming your way for you guys to get the best deal on everything financial in Australia very soon. So stay tuned for that one. One of the worst things I've ever seen in the world of finance globally, not just in Australia, was Westpac this week. So violating the money laundering laws 23 million times in relation to, all that child trafficking and, dark web related content that I won't go into for obvious reasons, but this is just absolutely ridiculous after a royal commission that things like this are happening. As usual, the banks say, sorry, we won't do it again, slap on the wrist fine. No wonder, I'm so bullish and everyone else is so bullish on Bitcoin, crypto, and the world of DeFi, because we need to decentralize finance. Look at what happens when you give people power. That greed just creeps in. Now, this was an awesome interview by Matt Barry. He recently hosted StartCon, so a startup conference, and Malcolm Turnbull, former PM. They spoke about everything from the NBN to the future of Australia and the economy. Have a search for this one. I'll link it below if you like, but I really enjoyed this interview, even if you don't agree with what they're discussing. Another theme I just wanted to touch on quickly here was governments and investors having this green mindset. So Crescent Wealth Super here have decided that they're not investing in tobacco, weapons, pornography, alcohol, insurance companies, and banks. Really interesting to see that. Now, last week I told you that there's been some countries that have sold all their Australian government bonds because they don't like what's going on with coal and that side of things in the country. So more and more investors are being really conscious about the ethical side of where they're putting their money. And regardless of what you think personally, that is going to affect some of those industries in Australia going forward. So over to China, where, speaking of renewables, they have apparently popped their electric car bubble. So any subsidy program, it really, water finds its level is a saying that I know you guys really love, because that is where governments interfere and money goes where maybe it wouldn't have previously. It's not a genuinely free market, so to speak. So this is going to weigh on lithium prices. I'm not a fan of some subsidies in this regard, but yeah, China electric cars, there's a lot of local Chinese producers now that are going to compete with, the Teslas of the world and all the large car manufacturers that are getting into that space. Now, a lot of you would have heard about skyscraper theory, where construction booms come to an end with a record number of skyscrapers, and that's what we've seen in China recently with more and more defaults. So another sign that's just like Saudi Arabia, we've seen a lot of overinvestment and euphoria in terms of property development, high-rise development. The tensions in Hong Kong and China continue to rise, and one of the funny things we see here is the friction with the financial system once again, with this anti-extradition bill causing bank accounts to be shut down in that area as well. So that wasn't the only case we saw this week. This gentleman here, Ralof Botha, has been a customer of Bank of America for 20 years, and he was the former CFO at PayPal, and he's had his bank account shut down with no explanation. So look, the crypto community are welcoming these sort of people with open arms and saying, become your own bank. And it's just not good publicity. It seems like every week we have some sort of reason or excuse for people to get into the crypto. Banks are making it really too easy to be disrupted. Now, in terms of governments issuing their own stablecoins, and the message is trust us. Yes, it's pegged to their fiat, but Venezuela proposed backing it with oil. So originally they said it would be 5 billion barrels of oil. They've dropped that by a factor of over 100 to 30 million of barrels now. So if you're an investor in that because you thought it was going to be backed by more, it's the same as the old backed by gold. Now it's backed by less gold or no gold, as well as we won't print more currency, because that's the thing that all these government issued stablecoins are pegged to. At the end of the day, they're still pegged to fiat currencies that has all the issues that we've spoken about time and again. Lebanon joined the bank issues this week. $10 billion in bank deposits have been lost. So obviously bond yields soar. People are fearful that they're not going to get paid back. Lebanon feeling the pinch. I hope these people, have access to the local Bitcoins of the world or some sort of way to escape what's going on, the clutches of the banking system. Even if it's just stable coins, Bitcoin, you can avoid these sort of issues, losing your deposits if you know how to do this. Now, at the start of the week, Donald Trump had an emergency meeting with Fed Chair Powell where they discussed negative interest rates. Why is this so important? Well, the ECB this week came out and said that their policies are threatening the financial system, the stability. It could lead to a crash because negative interest rates weaken the banks. Now, the next step, it looks like, just as Japan have tried, is the ECB members getting ready to buy stocks. So when the situation gets really bad, obviously they say this all now, they know what's coming ahead. They've got a better access to this data than anyone else. So just like we've seen with a number of countries, whether it's the Swiss National Bank, they're now holding $100 billion of US stocks. They're going to print money to buy up stocks. There's no such thing as a free market. Fundamentals are out the window these days. Now, UBS has said they've got no choice but to pass on those negative interest rates to customers. Obviously, it starts off with the rich customers and deposits over a few $1 million, and then it's down to $1,500,000, and eventually they've got no choice. If you say it's only people over $1 million, or as a millionaire, you open a few different accounts and you spread your funds out. So it just doesn't work. Negative interest rates just don't work. More and more people are wising up to this. Now, because of those negative interest rates, we've seen so much money flow into bonds and these other fixed income funds, ETFs and that type of thing. So threat of recession is one reason, but the search for yield as well. And I wanted to share this article. The world's best performing stock crashed 98% after it failed to be included in an index. So in terms of fundamentals and whatnot being out the window, people are front running when they think a stock is going to be added to an ETF, because so many people own ETFs. They know that all that money is going to have to go into that stock to buy that stock, to add it to these baskets of ETFs. So just another reason why a stock cannot possibly be worth 98% less just because it's not going to be included in an ETF. It is just so out of whack what is happening these days in the world of the stocks. So a bit of a conundrum. I just mentioned those equity outflows and money flowing into bonds, but this is also happening in the world of equities. So this is where central banks are propping it up, because we're seeing biggest ever outflows, even though stocks are at all-time highs. That's the dichotomy that we're facing here. So bond funds, a big uptick, but look at that. The actual flow of money out of stocks, the highest it's been since back in the GFC. It's really telling us a picture. Now, with all this happening, more and more people are having to go down that risk curve, the bond curve, to these triple C rated bonds. This, the junk debt type of thing, to get a higher yield. So credit markets are starting to crack. When we have these bonds get downgraded, a lot of the big funds aren't allowed to own them once they have a junk status. Now, with interest rates rising again, people say, well, I don't want that junk bond. I'm going to go back into a safer US, security treasury bond. So cracks starting to appear in that junk bond market, and we've seen things like this. These are the type of companies that are included in these junk bonds and the junk ETFs. So the WeWork valuation, it's obviously plunged. This is all just numbers on paper when they're trying to raise funds, and it looks like 17% of the company's workforce being cut, but this really has collapsed things like the price of their bonds, because investors are now believing that they're not going to get repaid because they don't have all this valuation and stock to sell to cover all their liabilities. So when I see things like this, and obviously we've partnered with eToro recently, but this is the reason I like them, because in Australia, something like the high yield bond index, it's very hard to trade or get access to. So we've got that sign up bonus at the moment, get $100 Bitcoin, but just learning how to short something like the high yield bond index, if we do get a crash, it's just a lifelong skill that I think everyone should have. Tesla had a huge pump this week off the back of that bulletproof truck that they've launched. It's had a huge spike. They're the sort of things which aren't unlike cryptocurrency, where it's probably going to pull back after a big pump, and being able to short and trade these, I really think this was hard to do in Australia up until now. So another chart showing that stocks may be heading lower, and this is margin debt to GDP. So every time this has had a big pullback, it basically shows us how levered up investors are. So borrowing money to invest in stocks. It's not that different to leverage crypto trading, and that is starting to unwind now. So despite all these things that we go over, stocks are still near record highs, and I believe that's almost solely due to buybacks and central bank intervention. Another thing that people ask me is why can't this go on forever? Just the money printing, the debt and whatnot. And what we see is that economic growth continues to slow despite this, exponential increase that we're seeing in debt. So you're having to print more and more debt to get the same amount of economic growth. And that just gets to this sort of runaway point now where you can't even pay the interest on your debt. So look, next round of QE, is it going to be $1 trillion a month just to try and get a little bit of economic growth? I think it's absolute craziness where this is all heading, and more investors are asking these questions. And even Chairman Powell said it this week. It's unsustainable. Debt is growing faster than the economy. You need to do something about it. And when we look at charts like this, once again, the Fed have slightly pulled back on their repos and, QE light that we're calling it. And what happens? The stock market has a couple of down weeks when they stop increasing their balance sheet. I've said it 100 times on this channel, but forget everything else. The stock market is now solely reliant and dependent on central bank actions, particularly the Fed. But as we saw before, the Swiss National Bank can print money and the ECB and buy US stocks, and they're all just helping each other out with that money that they're printing. So we see smart people like Ray Dalio hedging themselves, and this title was a bit misleading. We saw people coming out and saying that Ray Dalio is preparing for a market crash, and he said that that's not true. I think what they've done is buy a lot of protection, so a lot of puts options to protect themselves as insurance. So that's slightly different to betting that the stock market's going to crash. But yeah, we see smart investors looking to protect themselves, hedge themselves, and you don't want to be early. So just because it's not right that the stock market's this high doesn't mean that it's going to crash straight away. So the world's most bearish hedge fund has lost 75% of its assets in the worst year on record. So you may be right, but you don't want to be early. And that's why investing is becoming more and more like trading. You have to be able to time the market. Just like in The Big Short, which most of you will have seen, there's no point betting that something's going to go down when it keeps going against you. You've got to double down on your bet, particularly on margin. You can get squeezed out and, this fund could be wrecked, and then we might crash the following year, and they were right, but they were too early. So the world's ultra rich are scrambling, whether it's to hedge themselves or to get outside of the system. So we've seen record sales of things like safety deposit boxes, safes as well, I've covered in previous weeks. But the uber wealthy, the wealthy, and even just people that are conscious of what's happening are preparing. We see it with our relationship with Ainsley Bullion and talking about people that are getting into gold. I think gold's starting to get very attractive. And I actually tweeted this week, what would your ideal mix be for a hard asset investment fund? And I was a bit surprised that people chose to include the large cap altcoins as well, but I'll get into why that's important at the end. But either way, another thing that eToro are offering is being able to copy a portfolio. So I'm in the final stages now of putting together a portfolio that's going to give you access to gold, silver, Bitcoin, and I'm thinking maybe even just the top 5. I really don't want to take on risk. I want this to be considered a real hard asset portfolio, and that will be very easy for you guys to copy. So again, take advantage of that sign up with eToro if you're interested. And you will be able to even access this in your self-managed super, I believe. So we've got that partnership with New Brighton Capital. Hundreds of you guys have taken advantage of this. Free consultation, see if it's for you. But being able to get access to whether it's the eToros, other gold funds, Bitcoin, very easy to do. New Brighton Capital will look after you. Alrighty, so into the crypto news where Synthetics have brought out a DeFi basket. So this is the hottest space at the moment. Obviously, they're in the world of DeFi as well. That's why they've performed so well. But bringing out this basket with things like Maker, 0x, Bancor, I own a lot of these tokens already. But just like FTX have brought out those cool products, the large cap coins and the shitcoin index for you guys to trade, the DeFi index is very, very cool. And this is why Synthetics is gaining ground as a decentralized margin trading platform. So yeah, I might do a tutorial on how to use that exactly because there's so many cool things to trade. Kyber, another one that I think is really underrated at the moment. I predicted that they would hit their third burn of 1 million tokens within a month, and it took them 3 weeks. So they continue to burn more and more tokens as they're getting more and more in trading fees. And this one hasn't really pumped like Synthetics and Maker yet. So I'm very interested in Kyber at the moment. And one or two others that we did let members know this week. So Storage is rolling out their latest rounds of upgrades. They're preparing for the mainnet launch. They've got their pricing model. Web services are an enormous part of the tech world these days. It basically drives Amazon's profit model, and Storage are getting ready to compete. And another coin that hasn't really pumped yet, so keep an eye on Storage. We will do a deep write-up for members on the fundamentals of this one very soon. Now, Tezos has been pumping this week, or even for a couple of weeks now, partnership with Singapore government on this blockchain platform for training. So one of the things I've said about these proof of stake chains is that there's a dozen of them now, and the only thing that really gets me interested in one over another is partnership. So this is a step in the right direction for the Tezoses, the Algorands of the world, when they start to get real people, governments with real money actually using their platform. And now it becomes about the token use as well. So Tezos, not one that I own. They've had a few issues, but well done to them. They are heading in the right direction. So last week we had that fantastic interview with Eric Voorhees, and Shapeshift and their platform, their Keep Key, they've launched free trading, and what they're giving you are these Fox tokens which allow you to not pay those fees. So really good user interface. I will do a tutorial on this soon, but I think it's $100 of tokens that they're dropping for people if you sign up at the moment. So I'd really encourage you to check it out. This is like a Coinbase, but you install it on your computer, and again, you're in charge of your coins because they're going to be on your hardware wallet. Ledger support, Trezor support, I believe that's all coming. There's really going to be no excuse to have your coins on an exchange very soon, and that is another reason why this space is maturing. Roger Ver has injected $200 million into the Bitcoin Cash Fund. So I guess it's a good and a bad with people like Charlie Lee and having to fund Litecoin, Roger Ver having to fund Bitcoin Cash. How is the halvening going to affect these other forks of Bitcoin next year? A lot of people are saying that it's going to affect the Bitcoin and the hash rate and the mining and whatnot, but I think it's something that's not spoken about enough is how it's going to affect these other smaller coins. We've seen Litecoin's hash rate more than drop after the halvening. A big congrats to the Gods Unchained guys. They have officially launched their marketplace. So we covered this one months ago. I thought it was going to be one of the best projects in the world of gaming, and these guys are dominating. Aussie lads, all I wanted to say there was well done on building a working product that everyone's using. An article we saw about privacy this week was Mimblewimble and its weaknesses. So there's been a bit of a rebuttal whether or not this is a real issue, but the role of dandelion routing. Now, this is something that I'm very interested in. You think of the dandelion flower, you go up the stalk and then it has all the petals. That's kind of how they're going to try and obfuscate and add privacy layer to Bitcoin and a number of other chains. So a lot of privacy coins are getting on really well. We've seen partnerships and developers working together. So it's not a matter of one privacy technique being better than another. It's a matter of what do you need privacy for. And at the moment, Monero is probably still the leader in the best, overall general privacy, along with the Zcash, the ZK Snark based projects. In terms of privacy, Orchid is a decentralized VPN. So these days, I believe you have to use a VPN. You want to hide what you're doing online just for privacy reasons, not that you're doing anything bad, just to protect the data of yourself and your family. Now, VPNs are pretty cheap, even $10 or less a month these days, but a decentralized VPN, what that does is it takes away the company as a target for people to subpoena them and whatnot. Now, some of these companies actually don't have access to your keys. So even if they get subpoenaed, they couldn't hand over your data. But I guess it just takes it a step further. Interesting concept nonetheless, decentralized VPNs starting to be rolled out. In terms of hiding what you're doing online, this article really got the community up in arms. So Ripple's tax shelter and XRP schemes, the $1.2 billion foundation that made $0 in grants. So they did reply to this. XRP army up in arms and really angry about it. I'm going to try and get Missouri on the channel and have an interview about this because, as always, I think the truth lies somewhere in the middle. There's always illicit uses of all cryptocurrencies, no matter what it is, but this one's certainly having a real dig at XRP this week. One of the interviews we did do this week was with Coinfield and the new platform they're launching to list STOs, Sologenic, and It was awesome to see our video and interview quoted in a few different news sites, but he did come out and say that the XRP tech is stronger than Ethereum in their opinion. So once again, dividing the community, but we also saw Polymath leave Ethereum to go onto Parity's substrate platform. So obviously I love my Ethereum, but I want to try and give you guys unbiased news. There's some big upgrades coming up for ETH in the very short term, as well as the big 2.0 upgrade, but it depends what you need. And if there's another blockchain that's right for you, we're going to see people move. I hope you guys do appreciate the honesty there. In terms of Ethereum, obviously I'm still more bullish than ever. The amount of ETH that's locked in DeFi has hit a record all-time high. I really think DeFi is the next wave. We're going to see, just like we saw ICOs and then IO hype, we're going to see DeFi hype next year. We've already seen people jump ship into the DeFi space. I think it was the founder of 10x, Julian. He's now doing a DeFi project and trying to raise money again. You've got to recognize people that are jumping on whatever's hot at the time. We've got you guys in very early to make synthetics and the best projects. I hope you do appreciate that, and don't forget that Maker did launch multi-collateral DAI this week. So if you've got a loan in single collateral DAI, you will need to migrate and upgrade. It's very easy to do on migrate.makerdao.com. But well done to the MakerDAO guys. This has been 4 or 5 years in the making. So awesome to see them get there. So about halfway through the video, I mentioned the basket of large cap altcoins, and some serious wealthy investors are interested in having that sort of mixed exposure. So Grayscale have launched their diversified public crypto fund trading in the US. So it's a first of its kind. It is going to have a mix of these large cap coins, and that's why I want to emulate these types of funds where the big wealthy investors aren't going to be investing, out of the top 10 per se, unless they've got a real thesis on one particular coin. They're going to invest in the top 5 or 10. So that's why I want to, build this where most of the money is going to flow to let you get a nice, easy exposure with a basket. Grayscale, 84% of the interest in Q3 came from non-crypto hedge funds. So I recorded an interview with Morgan Creek fund manager and CEO Mark Yusko that is hopefully going to be out this week, and he said they've gone from having over 90% of funds reject them when they talk to them to maybe about 70%. So it's a step in the right direction. There is no doubt that the smarter money is getting interested in blockchain and crypto exposure, and when prices go down, think about who's on the other side of the screen, who is buying crypto if you're being shaken out and selling at these levels. The SEC have also announced that they're going to be taking another look at the rejected Bitwise ETF. And there's so many vehicles that allow people to get exposure. Mike Novogratz is launching 2 new Bitcoin funds targeting wealthy Americans. He is trusted in this space with Galaxy Digital and the funds they are doing, the Grayscales of the world. Fidelity gets charter from the New York Financial Services to Bitcoin custody as well. So storage, custody, insurance, as well as an actual product that's registered. The green light is being waved once we know the bottom is in. Now, one of the things that I'm most upset about is the backed futures, these cash settled futures. They're breaking volume records, 20 million this week. Why is there a need to go to cash settled product when everything is growing in the right direction? I think this is the biggest wolf in sheep's clothing, stabbed in the back, whatever you want to call it. I'm so disappointed with Backed, and I want to try and get Kelly or someone from ICE on to talk about why are they doing this? Why are you creating these products which you literally said you want to avoid when you were advertising Backed and winning the community over? It is getting really competitive on the global stage for who's going to have this blockchain innovation. So China came out with open arms towards blockchain a few weeks ago. This week we see the EU launching a 400 million euro blockchain and AI fund. They don't want to fall behind. You've heard me say it, whether it's the developing nations or the big boys, they don't want to fall behind US and China, the tech war that's going on there. I'm going to have a guest on soon to talk about the US-China technology wars, the patent wars. Now, the biggest news this week was all about Binance. So they've entered India, another country that crypto seems to get banned and then unbanned. It's grey, it's never black or white. Entering with their acquisition of crypto exchange WazirX there. Now, I'm going to try and get CZ on the channel for that hard-hitting interview. But in the meantime, I have reached out to Zebpay and my friends in India to ask how can this possibly work? And are they going to get in trouble like we saw in China this week as well with Indian regulators? So we broke this news. As I said, Matt's full time now, so we're up at all hours trying to punch out this article and get it out first. And I'm very lucky to have a friendship with CZ, Wei, and a lot of the Binance team now, and other projects, so we can reach out and get breaking news. So their quote was that there's no office, no raid, and no letter. And obviously markets really tanked. This was one of the reasons. It wasn't the only reason. We've been going down for weeks, but a lot of back and forth on social media here. The Block particularly came out with that nasty headline saying it's true and sticking to their guns. So CZ saying he's going to sue the Block now. I don't think we've heard the last of this one. We always try and report unbiased, up-to-date information, and hopefully you guys do appreciate that, and hopefully you got a few trades when we knew this news was going to break and possibly weaken markets. It's not just the US-China, crypto and blockchain and tech war. It's also the mining war. So it's such a profitable industry. And we've seen a gigawatt Bitcoin mine now under construction in Texas. So this is going to dwarf Bitmain. It's funny, all these fronts that this political war of words has been fought on now. Bitmain, yes, we have confirmed an interview with Jihan Wu in early January when he's coming to Australia. So I'm looking forward to asking him all those questions about what's been going on with Bitmain, Bitcoin Cash, and the overthrow, his return to power. Final chart I wanted to show you here was the inflows and outflows. And we saw a big spike this week, miners getting rid of their coins. So this isn't a perfect correlation, but as you can see here, it does tend to signal or happen near the bottom when we've seen capitulation in the past, and then we have these big runs in price. So just another thing, another metric that I'm starting to think, was that the cause for the sell-off, the weaker miners all selling, or are we still not close yet? We haven't found the bottom. This global map shows us the heat map of all cryptocurrency and retail adoption. So really awesome to see Australia and even Tasmania down here, a bright spot. Lots of crypto spending thanks to Living with Satoshi, these types of companies in Australia, and big adoption in Germany, in the EU in general, across the United States. But it's these regions here, South America's, Africa's, all throughout Asia. This is where the majority of the population lives, and this represents the biggest opportunity for crypto adoption. So when we hear these headlines about the US and China, remember, people in these other countries that are unbanked, they don't really care what's going on and what the news headlines say. So before we get into the TA, thanks to Bybit for once again sponsoring this week's technical analysis. Look, between them and FTX, you guys know that they're genuinely good exchanges. So many different order types. I've done this tutorial if you're interested. A lot of traders are turning to these platforms now when we see the issues with the other previously popular platforms. So I wanted to start off with synthetics, and someone asked, should you sell? Well, from the start of the year when we covered it at 4 cents, it's had this enormous run up to over $1. So you should always take some profits if you've done that well. And I got a message from someone saying, they're going to 17x out of that trade. Take some profits. These things always have some sort of pullback, but longer term, of course, this can keep going higher if it continues to grow and whatnot. And in terms of your portfolio, you don't want to sell at all because you never know when it can start taking off again, or if it doesn't have a pullback. A lot of people might have sold when it hit 50 cents. The next thing you know, it's at $1. So taking smaller percentages, 10 or 20%, being happy with how much profit you've made, but having a stash, if you like a project, that's always for the next 3 to 5 years is the way that I like to think about it. All right, so let's have a look at Bitcoin. We did get a breakdown out of that falling wedge pattern that we were looking at on the shorter time frames as well. It's accelerated to the downside. Let's just have a look at our cycle brackets quickly. And last week we said if we did lose this key level where we opened up the week here, we were going to fall and capitulate and continue out until around the 3rd of December is the next date when we could likely expect a bit of a push up. So let's just zoom in and have a look at The Bollinger Bands, these are an old favorite, and whenever we have this, these big wicks outside the Bollinger Bands, we tend to revert back to the mean. So I think we are due for some sort of relief rally. We're already back inside the Bollinger Bands from the live video I did the other night. We do have a bit of a trend line with a few touches now on this sort of descending channel. But I don't think that we can say with confidence that we've found the bottom. This bounce is once again not overly convincing in terms of the volume. We generally expect more aggressive buying, follow through, and a V-shaped recovery if we have had that big capitulation dump. Now the other scenario is that we do chop around and we break out. If we get the large volume come in and smack down on the wicks and the shorters are not done yet, that's when we can see us roll over. And I think, really, if we get down to the 6,000s, we know that on the longer term timeframes, that's where we spent a lot of time and there was a lot of support all throughout 2018. So, I kind of can't believe that we're down here and we've gone from up here all the way to down here in a matter of a few months. But the volume on this entire selling hasn't been overdone. It's not people selling their long-term Bitcoin. It is just a lot of traders and healthy market action, because the reality is we did have an incredible run. And when we look at this trend of where we went, at the start of the year, we can start to, draw these trend lines and say that we're really getting near to a path which is more of a healthy trajectory that we could maintain longer term. So I think it's never been more exciting as we head into, 2020 and the halvening. I'm going to do an update video on that. I hope you guys are enjoying all the content. Don't forget that fundamentals report, the gold and silver report, and that $100 eToro bonus. Smack that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.